Hey guys, it's Matt here from the Bull Call, and today we're going to take a look at CCIV, and it had another disappointing day here, closing around 8% down, so let's get right into the video. But before we get into the video, guys, if you guys can just go quickly take 10 seconds out of your day, go down below, click that like and subscribe button, click that notification bell so you can stay up to date on all my latest posts. That would be wonderful. So let's get right back into the video. Alright, so let's take a look at the 5-minute charts here. CCIV is right up in the top here. Currently I have VWAP is white, orange is EMA 21, blue is 50 EMA, this darker purple is 100, and this light like pink-ish color, neon pink, is the 200 EMA. We could see it actually, we had a nice little spike almost in the morning, hitting 2570, breaking almost above the 200 EMA, and we actually couldn't even hold that. We closed relatively flat on this candle, and we just saw a horrible day. And this was just, we saw a lot of breaking of all of the EMAs, and staying right below. We kept on rejecting VWAP and VWAP and VWAP, and we just kept on going lower and lower and lower. Now, this could be good. This is also bad, but we actually are still, if we take a look at the 4-hour charts, we are still within the supply area. So this is great news. We could still, we see all of this play out as we're still inside the supply area, which is really good. As long as we can balance at least this 2350 area is a perfect. We don't want to see it go pretty much any lower than that, and we'll be actually perfect if we get a nice little bounce right here. We can look for a double bottom, which is what we were hoping for. We can see one drop, another drop, and this actually could be forming, now that I think about it, a inverse. Oh no, it can't be. I was thinking inverse head and shoulders, but actually it can't, because it would be a head. Oh no, if this drops, let's say to here, pumps back up to around here, right? Because if it's a shoulder down, head, you want to see another drop, and then we can see a spike up. So we'll keep an eye on that. But as of right now, we're looking closer to a double bottom, which is exactly what we would like. Either a double bottom or a inverse head and shoulders, which would look a little something like this. You would see a nice little first shoulder creation here. Obviously it's just triangles, but you get the gist. You see another nice move downwards here, and then another move upwards. A rough idea of a head and shoulders here. Obviously it's not always perfect. Sometimes this candle can go up to here, or and then you want to see another bounce around the same level as the first time, and then you can see a massive spike upwards. So you can obviously play this trend. I saw this on Spotify. If we go over to Spot, I have it right here. So here's the first shoulder, dropped, popped up a little bit, dropped again, popped up a little bit, had an actually shorter shoulder, and it had a little pump, and obviously there was a whole massive April, May sell-off happening. So that's obvious. It doesn't always perfectly, but it followed it almost exactly. Where you see a first shoulder form, pump up, fall back down, pump up again, fall, relatively around these supply areas, and then, pump up a little bit after that. I mean, obviously it doesn't have to be a lot, but if you play these trends correctly, you could say, all right, well, I'm gonna short it or play puts for the next, day or two, and then you could see a nice little bounce around somewhere around maybe this supply area. You could play this, and then you could play it back down, and then you could play it back up. Now, the risky part is if it doesn't form a head and shoulders and this thing just drops. If you're playing puts, then you're good to go. Or if this double bottoms right now and you're playing puts, then you're also screwed, because then instead of forming a inverse head and shoulders, you're going to actually see just a double bottom, and this is just going to skyrocket tomorrow. Now, if we see a correction in the S&P 500, I definitely can see this dropping more, because this thing, obviously CCIV is not driven around the indexes, but like most other stocks, if people see stocks like major indexes selling off, they want to sell off before this drops and this lowers the price, and then more people sell it because it's lowering the price. Like today where it dropped 8% and everyone's worried, so it's just a lot of fear. But yeah, I mean, if we do see it drop below this supply area, then we definitely know that it's not doing this, because inverse head and shoulders is not a major downward. That's why I only drew it to right around here. You could see it. Even if it could bounce, not here, but it has to be lower than this first candle. It could be around here, anywhere that's lower than this. But it can't. I mean, there's no way it's going to be like this. I could tell you that. There's no real way. Even it would have to drop all the way down. The next candle would have to rocket up. There's no way it's going to do that. It might have like a small wick down or up, but it's going to probably look like this if it continues downwards. We'll check for whenever it bounces, and then we're going to see if it, holds on to a run upwards again. And you could possibly play off this inverse head and shoulders if you want to play the short-term options games. You could definitely see a lot of profit, but you have to be very careful. You want to see where this candle goes tomorrow into the following, week, because then we could see how this really sets up. And for long-term investing, obviously there's a lot of short-term pain. When you open up your account, you're like, why did I even open up my account today? I'm down 4% in total. And you're like, this is crazy after, obviously owning a more risky portfolio. You have to accept that when you open it one day, you're just going to see minus 4%. And it's going to hurt you. But you're just going to have to accept it, because the next following days, you might see plus 5%, plus 10%, or, even more if you just let it ride out. So for me, long-term, CCIV, still fine. There's no problems here. The only time I'll ever have a problem with CCIV if it breaks this $17.30, $17 level. If it breaks the $17 level, then I'm going to have to seriously figure out what's going on with this company, or this stock, rather. But, yeah, I mean, this could be a good area to buy. Could be a good area to buy here. We have to really see if this is a double bottom or a inverse head and shoulders, or if it just decides, let's just dump all the way down to 20s or the $17 level. Those are the three options here. We could see a nice pump. We can see a inverse head and shoulders form, which it just drops a little bit, maybe another 3 to maybe 5%, and jumps right back up the following few days. But yeah, I mean, I pulled up the RSI here. We're actually very bearish on the RSI right here. A bullish trend would look something more like this. I'll draw one right here. It looks more like that. That's more of a bullish RSI movement, and that's why you saw a lot of this. And then it looked a little bearish, and then we had this nice breakout. And then when it's above this purple box here, that means this is overbought territory. This is underbought territory. So if you're really looking at when you should buy, pulling up the RSI is a great tool, because you could see here, RSI was almost to the underbought area. You could have bought right when it was about to hit underbought, and you could have been up, almost $10 a share, which is like about 30%, which is crazy if you just played off the RSI. Now that's always risky, because is it always true? Not always. But it does show a good, it does show when and when not to buy. Obviously, when it had this massive spike of 30%, it did not know what's coming in the following days. But it did have a nice bearish movement that let it settle back down. And then obviously this thing, it's a SPAC, so it doesn't always follow everything. You can see even when it pumps up this day, 39%. When it was almost confirming that it was gonna merge with Lucid Motors, it didn't really. It went to the overbought territory, but it wasn't as bad actually as this 30% day. So RSI is something to always keep an eye on when buying. If we see it go down to this under oversold area, it's definitely a good opportunity to think about buying in. If you're not in, or to think about buying some shares. Personally, I would wait until 20. but I think that's when underbought or oversold would be more prominent. But yeah, I mean, that's pretty much it for this video. I know it was a little bit longer, but I wanted to explain what I could see for CCIV in the short and long-term future. Long-term, I'm saying, my price target to in the next 5 years is around 100 to 200 a share. And when you're thinking about, like, wow, in a year or two, a lot can go well and wrong. Obviously, more bullish is leaning more towards 200, more bearish and, having some problems with difficulties. And, like, really bearish for me, I would say in a year or two is $60 a share. So even that is multiplying your money by 3. Very extremely bearish for me is dropping down to $10. If there's more problems, or almost being like a no name company, if this thing does not take off, I think it has plenty of money. It's more about if they can get their product on the road efficiently. Obviously, people want it. There's a lot of reservation, but you can't go off the reservations. But I'm gonna have a whole other session on. I'm gonna pull up some articles, and we're gonna take a look through all these articles and really do some research on CCIV and what the future is holding for them. So, for me personally, I'm seeing anywhere from $60 to $200. 60 being very bearish, not producing a lot of cars, lots of problems with the cars, to around 200 where the cars are great, production's moving along fantastically. But yeah, I mean, that's pretty much where I'm seeing Lucid Motors, CCIV. Obviously LCID, the new ticker symbol is coming out in about a few weeks, a little under 2 weeks. So that's great news. I think that could also tie in to why I think that this Head and Shoulders is a very plausible and possible thing, because we could see a nice bearish movement and then bullish and then bearish, and then this is where we see, I think it's around the 20-something of July is when it changes, if it obviously gets approved, but I have no idea why it wouldn't. It would be stupid, and obviously then the stock would drop to $10 or lower. But as long as it gets approved, which is like a 99% chance it's going to get approved, we're going to see I think a pump, but you never know. That could lead, to problems, but I think people are going to be like, well, the Lucid deal's finally done. I want a piece of Lucid, even if it's, a small portion of shares and a lot of retail investors. And obviously this thing is kind of shorted, so could this be a gamma squeeze? Yeah, it can. But other than that, I mean, that's pretty much it for this video, guys. Stay tuned for more videos. I'm going to have another CCIV, a whole bunch of articles we're going to take a look at. That's why I have this one up. I have another one to look at. So yeah, I'll see you guys in the next video. Peace out.